Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Dmall Inc. Annual Report. Dmall Inc., an investment holding company, provides a wide range of businesses and services to retailers across various countries. The company operates in two main segments: Retail Core Service Cloud and E-commerce Service Cloud. Under the Retail Core Service Cloud segment, Dmall offers several key services, including digitalization solutions such as membership systems, smart marketing tools, prepaid cards, and mini programs. It also provides operational management tools like POS cash registers, inventory management, and mobile operation platforms. Additionally, the company offers category management, brand management, display management, and automatic replenishment services. In terms of supply chain management, Dmall provides solutions for suppliers, procurement, inventory, warehouse, and logistics management. The company also offers headquarters management services, including business finance integration, data reporting, and franchise management. Furthermore, Dmall Inc. offers AIoT artificial intelligence Internet of Things solutions that include intelligent warehouse restocking, loss prevention, remote monitoring, automatic overnight inbound systems, and IoT platforms. These cutting-edge technologies aim to enhance operational efficiency and customer experience for retailers. In addition to its core services, Dmall provides e-commerce service cloud solutions and offline marketing services and products. The company's flagship product is Fit, a full-link retail digitalization solution designed specifically for growing retail enterprises. With its comprehensive suite of services, Dmall Inc. has established itself as a leading provider of retail digitalization solutions globally. Dmall Inc. market capitalization of $7 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Dmall Inc. holds a significant advantage in their industry. Dmall Inc. trades at a higher price-to-book ratio of 10.67 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the provided information. On the revenue growth side, several key factors contribute to the 19.8% increase in revenue from 2024 to 2025. One significant driver is the AI Retail Value-Added Service segment, which saw an 18% increase in revenue. This growth can be attributed to the successful implementation of AI-powered next-gen retail transformation business and product upgrades driven by AI technology. The company's ability to launch major AI applications has delivered targeted empowerment, resulting in multidimensional value improvements such as inventory turnover optimization, dual growth in revenue and profitability, and a leap in operational efficiency. Market expansion through partnerships with leading domestic and international retailers has also played a crucial role in driving revenue growth. The acquisition of large-scale, high-quality clients and deepening cooperation with existing clients have contributed to the company's success. Additionally, the net revenue retention rate of 108% in 2025 indicates strong customer loyalty. On the other hand, there are no primary drivers of revenue decline mentioned in the provided information, except for a decrease in take rate revenue, -17.7% to -45.5%, and a ramp-up in Dmall OS projects implementation and delivery with relatively lower margin at an early stage. The cessation of Dmall app and mini programs operations is also noted as a contributing factor. Overall, the company's focus on AI-powered retail solutions, market expansion, and customer retention has driven significant revenue growth, while the decline in take rate revenue and ramp-up in Dmall OS projects implementation have contributed to revenue decline. The net income of the company experienced a significant increase, rising by RMB 579,786 and by 13.9% from RMB 746.4 million in 2024 to RMB 849.8 million in 2025. This growth can be attributed to various factors. However, the profit margins showed mixed results. The gross profit margin decreased from 40% in 2024 to 38.1% in 2025, indicating a slight decline. On the other hand, the operating profit margin increased from -9.4% in 2024 to 3.8% in 2025, marking a substantial improvement. Closer look at the gross margins of specific segments reveals that the AI Retail Core Solutions segment experienced a decrease from 76.4% in 2024 to 67.1% in 2025, while the AI Retail Value-Added Service segment saw an increase from 8% in 2024 to 11.7% in 2025. The optimization of gross margin structures by approximately 30% due to reduced spoilage is a notable achievement. This improvement suggests that the company has made significant strides in managing its inventory and reducing waste, which has positively impacted its bottom line. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided information, the company has successfully generated a significant amount of RMB 45.9 million in positive operating cash flow. This is an improvement of 7.4% from the previous year, demonstrating a notable increase in the company's ability to generate cash from its core operations. The performance of various regions and segments in the industry has been analyzed, revealing both positive and negative trends. In terms of regional performance, the Chinese mainland and overseas markets have shown significant growth, with revenue increasing by 19.1% and 21.8%, respectively, from 2024 to 2025. These results indicate a strong demand for products or services in these regions. On the other hand, some segments have underperformed despite high revenue growth. The AI Retail Core Solutions segment, for instance, saw its revenue increase by 22.2%, but experienced only a modest gross profit growth of 7%. This suggests that while this segment is generating more sales, it may be struggling with profitability. In contrast, the AI Retail Value-Added Service segment has demonstrated strong performance across both revenue and gross profit metrics, with increases of 18.3% and 71.8%, respectively. The company's management has outlined a clear strategy for its future growth and development. The core focus will remain on advancing its artificial intelligence, AI, capabilities, integrating them into every stage of the research and development process to create more sophisticated retail AI agents. This shift is expected to drive dual growth in both revenue and operational efficiency. The company aims to transition from a traditional software service provider to an AI agent provider, which will enable it to offer more value-added services to its customers. To achieve this goal, management plans to adopt a long-term cooperation mechanism with value co-creation and revenue sharing, replacing the current traditional software service fees model. In addition to these strategic objectives, management has set specific targets for 2026, including developing new applications and service modules, expanding operations through talent acquisition, and pursuing strategic partnerships and investments. Furthermore, significant investments will be made in the AI sector to enhance recruitment of AI specialists, develop next-generation products, and improve R&D efficiency. Overall, the company's management is committed to driving growth through innovation and strategic partnerships, positioning the organization for long-term success in the rapidly evolving retail technology landscape. Concerns have been raised regarding inventory buildup, a pressing issue that warrants attention. According to the information provided, this concern is explicitly mentioned on page 51 of a relevant document or report. The presence of such a specific reference underscores the significance of addressing inventory buildup as a potential problem. The mention of inventory buildup on page 51 suggests that it is a notable issue that requires careful consideration and analysis. It implies that there are concerns about the accumulation of excess stock, which can have various consequences for businesses and supply chains. That concludes the financial summary for Dmall Inc. Feel free to comment below, and I will be happy to answer them when possible.